Your trading will have a before and an after this video. I will show you how I went from being overstressed, over trading, to making $16,953 on just one of my investor accounts in November. And I can't show the other one because I'm just under NDA, so I just can't show anything. I don't have the right to. The advice I will give you will be insane. I will give you a boom of value. I feel bad for giving this for free, to be honest. If you just give me 10 to 15 minutes, I guess it will be, you will definitively take an advantage in trading, and what I will give you is extremely applicable and will make the difference. To be honest, why I'm sharing this with you, I want to give you a shit ton of free value. So you have all the keys to be profitable in the next 1 to 2 years without being lost on YouTube with all these ICT gurus, with all these guys showing you things that are subjective, not backed by any data, that are really amateurs in trading, full focus on selling you their prop firm dream. Okay, I just want you to really get profitable in the next 1 to 2 years and not let you spend your time, your next 1 to 2 years, having this illusion of you will make a shit ton of money in trading, while in reality, if you keep doing what you're doing, you will make no money. Okay, I do that because I know that then a few of you will apply to my mentorship, because it will shortcut this little time and you will get to profitability in 3 to 6 months instead of 1 to 2 to 3 to 4 years. Okay, I'm being honest, this is a really long game. It doesn't take you like 6 months to be profitable if you're just solo in the game and you have nobody to really like be with you. Okay, I've spent 5 years and I've been profitable after 2 to 3 years. So for most of you, you're already using HTF in your trading. You just look at the big point of interest in daily or H4 or whatever big time frame, and you find yourself hesitating on which mitigation you should wait for. Like, why this one? Why not this one? Why shouldn't I wait for this one? This guy on Twitter just tweeted this, is waiting for this imbalance in weekly. Why should I wait for this instead of this? Like, it's just total chaos. And it's quite normal because you looked at what everyone was doing and you've done the same. You've used the same process. But we all know that in trading, 90% are losers. So you need to look at what the overall mass is doing and trick it. And no, you don't want to look at what the overall mass is doing and do the complete invert, because there is some rightness in what they are doing. You don't want like to look at the black and do the white like binary. No, you want to look at the black and do the gray. Okay, you need to think in a non-binary type of mind. Okay, you need to be like between both. Okay, just go in the gray, and that's what I've done. You look at what everyone is doing and you trick it a little bit, so you will make money. And if you keep going like that, if you keep doing the exact same thing, like wondering which type of point of interest it will be, which mitigation I need to choose, and you don't know what you're fucking doing, and it's quite random, your trading will be very, 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 very stressful. You will never know where, when to execute, what to wait for, and you will end up in a shit ton of losing streak and in a shit ton of anxiety. So now I'm going to show you my 4-step process that helped me get the bias right 80% of the time, backed by data, and all my students got it too. For example, I received this message 2 days ago. I can't show the conversation because it's on Telegram, but there is other thing about my mentorship inside, so I'm just screening this. This is from Romain, one of my students. So yeah, he backtested the system and he got like a 80% read rate on 2018. And that's the type of message I receive from all my students when they learn the HTF system and they go through the backtesting, when they test it themselves in demo trading, then live trading, etc. They've got a really high win rate. And this is because everything I do is backed on data. If you look at the data I give to my students, they see that if you average all the data, etc., you do an average. We got from 62.2% to 71% of the time the right bias for the week on 208 weeks and 52 weeks of live market testing and backtesting, like literally almost 300 weeks. We got the right weekly bias 66.6% of the time in average. Okay, and so then I give it to my students and they got the exact same results, since it's objective, it's a system, they're not guessing. Okay, so what are those 4 steps? The first step is switching from a predicting process to a reacting process. What I mean by that is that we don't want anymore to be like, okay, I come to my chart, let's go to chart directly. And yeah, exactly, already written down. I go in my weekly, and I see what? I see in weekly an fair value gap here, which is a volume imbalance. Okay, I see that we have a volume imbalance. Then I drop into my daily, and in my daily I see so we have the volume imbalance, and I see a big imbalance here. Then if I come back into my weekly, I see an imbalance here once again, and I'm like, okay, which one should I choose? Should I wait for here directly and trade it here? Should I wait for here? Should I wait for here? Okay, and so you have just this big range of like 70 pips almost, and you just don't know what you're going to do. Should I execute here, here, or here? Okay, and here you're just trying to predict, and this is the bad thing. You want to switch from this predicting process to a reacting process, which is when this happens, I do this. Okay, so let's say we have this mitigation, and this mitigation. You know exactly what you do when we come on this. I do like when we do X, I do Y. Okay, so Y, and you need to define what is Y. Okay, I'm talking to you really in a data way. Okay, so when we come to X, X1, X2, X3, we do Y. Okay, and Y is at the same time. Each time the same thing, the exact same thing. So when we come to X, we do Y. Okay, we do Y. Then when we come to X again, we do Y. When we comes to X again, we do Y. So we react. We do not try to predict. And what is a little reaction you can have that can make you a shit ton of money? The reaction is a confirmation. So let's say when we come to X, we want to have a confirmation. And when we have this confirmation, we will take a trade. No, this is really interesting because a lot of people say that you need to have a confirmation. But what you need to do is define this confirmation exactly, and you need to make it crystal clear. You need to make this confirmation crystal clear. So it's a confirmation that is valid if this happened, if this happened, if this happened. And if it's not crystal clear, then your subjective mind, your greed in trading, all the psychology bias will come into place, and you will just end up over trading. You will say, oh, this was a confirmation, it looked like it was a confirmation, so you will execute on this, but it was not. It's not backed by data, it's not objective, it's not well defined. Okay, it's a confirmation because it have this and this. Okay, it's a confirmation. No, you don't have that. So again, you will just end up literally gambling your money. So that's the switching from a predicting process to a reacting process. So now we've just fixed the wall. Should I wait for this or should I wait for this? Okay, we just fixed this wall thing. Again, another thing you need to define is like what I've just like draw here, the lines I draw, or mitigation. But you need to objectively define what is a valid mitigation for you. And me, I define it with tools. What are my tools? My tools are imbalance. My tools are volume imbalance. My tools are inverted imbalance. Okay. These are my three main tools, and I will only take mitigation from these three main tools. Why? Because I define them, and then I've like backed them up with data, and I know based on this data that I make money if I follow this. So I know that if I define my mitigation like this using those tools, so imbalance, inverted imbalance, and volume imbalance, and then when price come on X, I do Y, which is a confirmation, which is well defined. I know that based on almost 300 weeks of data that I will get my weekly bias right 66% of the time. Okay, so I will just follow the system. Boom, I have the right weekly bias 66% of the time, which in reality is much more. Like I'm averaging almost 80% on this year, not on the last 3 years, but it's better to take the last 3 years of data as data. Okay, so yeah. Let me delete this, can I? Seems like I can't. Okay, I can. No, the second thing is exactly defining what is a clear trend and what is not a clear trend from a crystal clear process. What most people do when they try to define something clear, they will just, try to define the thing clear. But the starting point that you should go from is define what is not this thing. Okay, and when you define what is not this thing, you end up having the perfect variable for what is this thing. Okay, so first I started to define what is not a clear trend. Because I know that my trading system operates really well and make a shit ton of money when there is a clear trend. So I only want to trade when there is clear trend. But what is the problem when I say that? My mind, my psychology. One day I can be like, oh, it's been 1 month not trading, because it's been 1 month I've been saying the market is ranging and it's not a clear trend. Oh, I want to trade now. I don't give a shit. Like, people on Twitter are trading, people are executing position, people are making money. Let me trade now. This seems like a clear trend. Okay, no, this seems like a clear trend. That's good. Let me trade. And it will just be like full grid. So if I do not have a specific process that define what is a clear trend exactly from A to Z, then when I will have bad periods, losing streak, waiting period, patience period, if I do not have a checklist to know exactly what is a clear trend, I will just jump into the market and lose a shit ton of money and start to overtrade, because I know that, like, my strategy will not work in those market conditions. It will only work in those market conditions or those market conditions. Okay, so I want to avoid this. But to avoid this, I need to create a process that told me exactly what is this or what is this, when we have this or when we have this. Okay. And this is the process that is just right here. Let me show you this. This is not the entire process, of course, but this is a part of the process. So first thing first, I want to have a shift. Okay, I want to have a shift because when price shifts, a trend is created. When I do have a shift, I want price to create an inefficiency. Okay, an inefficiency which is volume imbalance, or inverted imbalance. And when I do have that, I want price to retrace into it. And when we've retraced into it, then I can start to execute my position. If we do have a confirmation, if we do have the Y, okay, so we have the X. If we do have the Y, I can then take a trade towards a target, okay, target that is defined and that I will show you. So yeah, that's the process basically. I want a shift, and when I have a shift, I want an inefficiency in price. And this is a little rule here. So this is what it looks like. Shift, trend created, okay, and then I want an inefficiency in price, and when we come inside this, if we have confirmation, I can do my execution based on other variables. Okay, so yeah, now what you need to do again is to define what is a shift. So each time you create a new concept, you need to define what is a shift. What is a shift? A shift is when we take X amount of lows or X amount of high or X amount of structural points. But what is a structural point? You see, each time you define everything, and that's how you do it. And this takes years, to be honest. Let's say this takes months. If you're a hard worker, this takes months. If you have a fast mind, you understand everything I do, and you just consume all my free content, this can take you a few months, yeah. But then you need to back up everything with data, so it's quite hard. But yeah, this took me literally years, okay? But now I have a really good system. So yeah, third thing, what you don't want to do is this. We only want to take point A, okay? Move from point A to point B. And we only want to take point A, that is a mitigation in the trend. Let me explain that. I'm trading a system where I make money only if we are trending and if I take trades in the trend. If I take a trade from here, so price is just going down, I say, okay, let me try to buy, I will not make money because backed on data, I know that I will not make money. So the only way for me to make money is when price retrace and come here inside the trend and I sell, okay? And I sell here, or same thing if you're buying, I buy, okay? So this is the only way for me to make money, and I know it 100%, okay? So I'm just going to respect that. So I don't want to take entries that looks like this, okay? So we have a clear trend that has been defined, and the last thing you want to do is take a trade here to target the mitigation that is here. No, you don't want to do that. You will lose a shit ton of money. So I avoid doing this because I've done it a lot, and I know a lot of traders are doing it. They are like, okay, they're looking at past charts and they're like, okay, let me look at the post charts, let me take this, and they're like, okay, this is like a bullish trend, and so I want price to retrace and then buy, okay? But guys, what you need to look at is the actual price just right here. What happens? We just had a shift here. Trump is back in the market. EURUSD is going very, very down, so you don't want to buy. Okay, we are in a sell trend. We are not in this illusion of a buy trend where you need, you're looking at your mitigation from 2 years ago and you want to take a buy from here. No, we are not in this illusion here. We are actually in a sell trend. So you don't want to take a trade from here targeting here. No, you want to go with the trend and just, yeah, execute your position by sell. Okay, so this was one little clarification. And then what do we have? Trend validated, switch to reacting process. Yeah, so the step is like, first you want to have a trend validated, so let's say a crystal clear trend, CCT, and when you do have your CCT, then we switch to reacting process, let's say RP. We switch to reacting process. So when you have a crystal clear trend that is defined with a crystal clear process, then we switch to a reacting process. Okay, and when we react, what is reacting process again? Let me do it to you again. We have X variables, which are my mitigation. And when price come on these X variables, we do Y, we do Y, we do Y. Okay, and what is Y? Y is a confirmation, and the confirmation is objectively defined. Okay, so when we have the confirmation, we execute. If we do not have any confirmation, we continue until we have one. Okay, but there is a problem here. I said until we have one. So price can, with what I gave you here, price can just do this, and I said, okay, nothing, okay, nothing, okay, like no Y, no Y, no Y, okay, so no execution. But when does it stop? It seems like it doesn't stop. And that's when I created the invalidation. You need to create a point, and when this point is out, your trend is invalidated. So your bearish trend is not here anymore, and we just switch it to a bullish trend because we had a new shift. So you need to define a point in your chart where if we take out this point, the trend is invalidated. So we stop looking for these cells here, for example. So this is what I've called here, what you see just right here, objectively defining invalidation. Same thing for the target. You need to define a target for your trend. Each time a trend is created, the trend creates with herself an invalidation, a mitigation, and a target. When the target is reached, it's the end of the trend. We want a new mitigation again to continue the trend. When the invalidation is reached, it's the beginning of a new trend, so a new mitigation, a new invalidation, etc. So yeah, that's my process basically. Target, mitigation, invalidation. And so if you need any help with your trading, we do offer free demo call. You can book in through the page directly here. Just scroll down and you will have the booking link. You have it on the bio of my Instagram, on my YouTube description, everywhere. It's a free call, no pressure. We help you build a personalized plan depending on your struggles in trading, just to get you profitable as soon as possible. Thanks a lot, guys. I wish you all the best. Have a wonderful day. And I wish you one more thing. Take profits only. Bye-bye.